China has just frozen all outbound investments into United States companies, cutting off a critical source of foreign capital that American businesses depended on. No warnings, no debates, just a quiet directive from China's Ministry of Commerce and the State Administration of Foreign Exchange that sent shockwaves through financial markets. This is not an emotional reaction. It is a cold, strategic move designed to apply maximum pressure without sparking immediate retaliation. With Chinese investment having already plunged by over 95% since 2018, this latest move brings it to almost absolute zero. The fallout is spreading fast from Wall Street to Main Street, and it is revealing deep cracks in the American economy. Today, we are going to dive deep into what China is doing, why it is doing it, and how this quiet financial strategy is putting massive pressure on the United States without firing a single shot. We will talk about the crumbling American investment landscape, the reshaping of global finance, and what it means for all of us moving forward. First, let's make one thing clear. China's decision to halt outbound investments into American companies was not emotional. It was not a knee-jerk reaction to a single policy or a single political figure. It was methodical, well-planned, and deeply strategic. For years, Chinese investment in the United States had already been declining. Since 2018, it dropped by over 95%. The relationship had been sour for a while, mainly because of constant sanctions, restrictions, and hostile rhetoric from Washington. Under Donald Trump and continuing into his second presidency, American policies have only become more confrontational, treating China as a threat rather than a partner. China, being the long-term strategist that it is, did not retaliate with loud gestures. Instead, it chose precision. By freezing all outbound investments into American companies, China effectively cut off what was left of a critical foreign capital pipeline. This move was directed quietly by China's Ministry of Commerce and the State Administration of Foreign Exchange, and it sent a crystal-clear message. If you treat us like an enemy, do not expect our money to help fuel your economy. In the past, Chinese companies looking to invest in the United States went through a fairly straightforward process. They would seek approval from domestic authorities, secure the necessary foreign currency through China's State Administration of Foreign Exchange, and then move their funds into the American market. Investments ranged from tech startups to real estate, energy sectors, and manufacturing ventures. Chinese money became a vital source of capital for many American companies, helping fuel innovation, expansion, and job creation. But now, China has changed the game entirely. Through a quiet but sweeping directive, China's Ministry of Commerce and the State Administration of Foreign Exchange have imposed new internal controls. All outbound investments into the United States across all sectors are either indefinitely delayed or outright denied. Even applications that were once rubber-stamped are now left pending with no timeline for approval. Companies are being told explicitly to redirect their investments into safer, friendlier regions such as ASEAN, Europe, and parts of Africa. This new system does not rely on flashy public announcements. Instead, it works through bureaucratic slowdown behind closed doors, and it is brutally effective. In effect, China has slammed the brakes on the last trickle of capital flowing into the United States without sparking immediate legal battles or diplomatic retaliation. The impact on the United States is profound. Venture capital funds are drying up real estate projects that depended on Chinese investment are being canceled or delayed indefinitely. Startups, especially in sectors like clean energy technology and biotech, are losing a key funding source that once helped them grow rapidly. Without Chinese capital, many American companies are finding it harder to access affordable financing. They are turning to riskier funding sources like high-interest junk bonds or unstable venture capital firms that demand aggressive terms. This is creating a vicious cycle of financial instability at a time when the American economy is already under heavy strain from inflation, high interest rates, and global competition. Meanwhile, China is redirecting that same capital into more promising markets, building new alliances, and strengthening its global economic network. Now, a lot of people might be tempted to point fingers at China and blame them for America's financial pain. But let's be honest, the real problem is American political leadership, not China. Donald Trump's aggressive policies, his chaotic handling of international relations, and his protectionist economic measures have done far more damage than anyone wants to admit. American businesses are now desperate because they relied heavily on foreign investments to grow, and with China stepping back, the cracks are starting to show. Foreign direct investment into the United States is dropping sharply. American companies that once easily secured funding are now being forced to issue high-interest junk bonds just to stay afloat. This is not sustainable. It is a ticking time bomb. One of the pillars of Trump's economic agenda has been reshoring, bringing manufacturing back to the United States. In theory, it sounds great, but without sufficient capital, it is almost impossible. Trump's 2025 executive orders have tried to strong-arm companies into relocating production facilities back home, but the necessary foreign capital simply isn't there anymore. China's quiet withdrawal has dried up one of the major pools of money that these projects needed to succeed. At the same time, tariffs on Chinese goods are making everything more expensive for American consumers. Prices are climbing higher and higher, and there is no end in sight. Wages are stagnant, corporate profits are shrinking, and inflation is refusing to come down. This perfect storm is making life harder for the average American, and it is not because of anything China did out of malice. It is because American leaders chose confrontation over cooperation, and now they are paying the price. Back during his first term, Donald Trump promised that tariffs on Chinese goods would rebuild American manufacturing and bring prosperity back to the United States. He painted a picture of factories reopening, jobs flooding in, and the economy booming. But the reality has turned out very differently. Instead of boosting American industry, Trump's tariffs have driven up costs for American companies across the board. Materials, components, and finished goods from China all became more expensive, squeezing profit margins and forcing businesses to either absorb the losses or pass them on to consumers. Neither option was sustainable. Small and medium-sized businesses were hit the hardest. Unlike the big multinational corporations, they could not just shift production overnight or negotiate better supply chain deals. Many of them were already operating on thin margins, and the added pressure from tariffs pushed them to the brink. At the same time, China's strategic patience paid off. Rather than engaging in a tit-for-tat escalation, China diversified its markets, deepened trade relationships with Europe, ASEAN, and Africa, and strengthened its own domestic industries. American companies, on the other hand, found themselves isolated, burdened with higher costs, and locked out of growing international markets. Now, with China freezing outbound investments and accelerating its divestment from American assets, the situation is even worse. American companies are not just facing higher costs, they are also starved for capital. The reshoring dreams that Trump sold to the American public are collapsing under the weight of financial reality. Instead of a manufacturing renaissance, the United States is seeing layoffs, plant closures, and a widening economic gap, all because of a strategy that was based on short-term political wins instead of long-term economic planning. Perhaps the most dangerous effect of China's strategic move is the growing erosion of investor confidence in the United States. Uncertainty levels are the highest they have been in over a decade. CEOs and investors are not just worried, they are acting. They are pulling their money out of American markets and looking elsewhere for safer, more stable opportunities. America's soft power, the ability to influence the world through culture, values, and economic strength, is fading. Allies are diversifying their partnerships. Europe, Saudi Arabia, and ASEAN countries are all strengthening ties with China, attracted by its policy stability, its growing markets, and its refusal to be dragged into unnecessary conflicts. Meanwhile, the United States is looking increasingly isolated. Its political leadership is unstable, its economy is fragile, its currency, once the undisputed king of global finance, is now being challenged in ways that were unthinkable just a few years ago. While the United States is struggling to maintain its position, China is quietly building an alternative financial ecosystem that is faster, more efficient, and more resilient. First, China is fast-tracking IPOs in Shanghai and Shenzhen. These stock exchanges are becoming the go-to places for companies seeking capital, offering attractive terms and a stable environment. Second, China is increasing investment in ASEAN markets. Countries like Vietnam, Indonesia, and Thailand are seeing massive inflows of Chinese capital, strengthening regional economies and creating new hubs of economic activity outside of the traditional Western-centric system. Third, and perhaps most importantly, China is expanding the use of the digital yuan internationally. By promoting its own digital currency, China is creating an alternative to the dollar-dominated financial system. Transactions can now be conducted without touching the dollar at all, reducing America's financial leverage over other nations. This is not about sudden upheaval, it is about patient strategic construction of a new global financial architecture. one that makes the dollar just one option among many. The real risk for the United States is not just economic, it is systemic. For decades, the strength of the American dollar underpinned American global dominance. Countries needed dollars to trade, they needed dollars to invest, they needed dollars to survive. But now, thanks to China's strategic moves, that necessity is slowly eroding. Countries have more choices. They can trade in yuan, they can invest through Chinese-led initiatives, they can bypass the dollar altogether. This does not mean the dollar will disappear overnight, but it does mean that America's uncontested financial dominance is coming to an end. And once that leverage is gone, America will find it much harder to impose its will on the world through sanctions, tariffs, and financial pressure. China is achieving all of this without firing a single shot, without launching a single missile, without engaging in a single war. It is doing it through patience, strategy, and a deep understanding of how power really works in the modern world. There is a powerful lesson here for anyone who is paying attention. While American leadership under Trump has been impulsive, emotional, and short-sighted, China has been patient, strategic, and focused on the long game. Instead of lashing out, China is slowly building the future it wants to see. A future where it is a central pillar of the global economy, not a peripheral player. And the truth is, many countries around the world welcome this change. They are tired of being at the mercy of a single superpower. They are eager for a more balanced, multipolar world where they have real choices. By withdrawing investments, reducing dollar transactions, and building new financial alliances, China is leading the way toward that new reality. Of course, none of this is easy or risk-free. China faces its own challenges, economic, political, and social. But the difference is in how those challenges are managed. Where American leadership often resorts to blame games and short-term fixes, China focuses on long-term solutions and incremental progress. That is why it is gaining trust around the world while America is losing. For those of us who follow global politics and economics closely, it is clear that we are living through a historic transition. The world order that emerged after World War II is evolving. Power is shifting, new alliances are forming, and China is not just reacting to this change, it is shaping. So, where does that leave us? Well, if you are in the United States or Europe, it is time to rethink old assumptions. The world is no longer a place where one country can dominate forever. China's strategy of quiet financial withdrawal and patient ecosystem building is changing the game. Rather than fearing this change, we should understand it and respect it, learn from it. Because the future belongs to those who plan carefully, act strategically, and think beyond the next news cycle. If you enjoyed this deep dive into the shifts happening right now in our global economy, make sure you stick around. We have some amazing upcoming videos where we will talk more about the rise of ASEAN, the expansion of the BRICS alliance, and how China's Belt and Road Initiative is rewriting the rules of international trade. Thanks for hanging out with me today. If you like this kind of content, you know what to do. Take care and see you in the next one.